Finance Minister Pranab Mukherjee met with public sector banks and asked them to cut the cost of credit. So can we expect interest rates to go down this year? We speak to our correspondent Sanjeev to get some insight. So Sanjeev, how likely is it that banks will cut rates?
Very likely, in all probability by August, because a lot of banks who've borrowed deposits at fairly high costs last year are going to find that the deposits mature by August and they can raise money at lower rates. So that's automatically going to lead to lower lending rates.
Are bankers under more pressure to cut rates under Pranab Mukherjee than they were with Chidambaram, the previous finance minister?
Well, I think all finance ministers try and put some pressure on public sector bankers to cut rates because it helps growth, and growth always helps any political party in power. Yes, Pranab Mukherjee did very clearly indicate that he wanted them to cut rates. He did issue a written statement even when the meeting was in progress saying that he's worried about the rates and he feels that cost of credit is a critical issue.
And what were the arguments of the bankers at today's meeting? What was their position?
Bankers have long stated that the lending rate is linked to the rates at which they raise deposits, and the rates at which they've raised deposits in the recent past have been fairly high. It's only in the last couple of months, or maybe 6 months, that it's come down. There's very little they can do till the deposit rates come down, and that's what's going to happen in August when some of the old deposits mature. And the other thing that they do raise, and they did raise again today, is that small savings schemes of the government have a fairly high rate of interest, 8% in most of them. So they feel that the small savings schemes at 8% act as some kind of check on deposit rates coming down, because if they bring deposit rates too far down, some money tends to migrate to small savings schemes.
Thanks, Sanjeev. And thanks for watching LiveMint.com.